Brisbane's property market has been one of the hottest in Australia, and a lot of investors are asking the same question. Is it still possible to find a great investment under 1.1 million? The short answer, absolutely, but only if you know where to look. There are two ways to pick an investment suburb. You can wait for the media to tell you where to buy, which is usually too late. Or you can follow the numbers before everyone else catches on. I'm Gilbert, a property data analyst and investor. I just run the latest Brisbane property data and found 5 suburbs where supply is shrinking, buyers' interest is climbing, and prices are already moving, making great investment opportunities. Let me show you where they are. Before I dive straight into the list, I want to explain how I found these suburbs. There are dozens of suburbs in Brisbane priced around 1.1 million or below. So to narrow it down, I use a data-driven approach that focuses on the following. Tight supply. Fewer properties available for sale usually means more competition and upward pressure on prices. So these are usually indicated by stock on market percentage and low sales days on market. Number 2, strong demand. If properties are selling fast and buyers' interest is rising, it's a clear sign of a desirable area. Well, one of the data points that we normally use here is days on market, and we put that to under 30 days. Third, healthy rental market. Low vacancy rates and solid rental growth point to consistent investor returns. And the data points that we use are rental yield, which we put as 3% minimum and above. Next is vacancy rate at 3% and below. And lastly, the diminishing supply of rental listings in the area. And lastly, at number 4, proven capital growth. I look at both short-term and long-term price increases to ensure the suburb is trending up sustainably. And as you can see here, on the 3 months change, I put this at 2% minimum and above. And on 12 months change on median price, I put here as 3% and above. All of this is done using SuburbsFinder, a tool that I built that's used by property investors, buyers agents, and mortgage brokers across Australia to spot the best location. I applied these filters specifically to Brisbane, capping the median price at 1.1 million. And here's what I found, starting with the highest median price and counting down to the most affordable. At number 5, we have Stafford, with a median house price of 1.1 million. And here's why it made our list. Stock on market is at 0.54%. This is incredibly low because supply is limited and very few properties are listed, which can cause property prices to go up. And the days on market is 15 days, which is really good because anything under 30 means properties are really getting snapped up right away, which is a good indication of demand. And capital growth over the past 12 months is a huge 14.58%. This suburb's shown a consistent price growth, which is a good sign for buyer confidence. Lastly, vacancy rate is 1.34%. So anything under 3% is low, which means properties are quickly snapped up by tenants, reducing the risk of rental loss income. Well, Stafford has a good track record of historical capital growth. It's ideal for investors who don't mind paying a bit more in exchange for steady long-term growth. If you're gonna add in 50,000 more to get 100,000 more growth, then it justifies everything. So if you have a budget closer to 1.1 million, Stafford might suit you if your priority is capital growth over slightly higher yields. The yield is still decent, but less than you get in cheaper suburbs. And at number 4, we'll have Carseldine, with a median house price of just under 1.1 million. As you can see, stock on market is at 0.44%, which means it's extremely low and there aren't many properties for sale. So oftentimes, potential buyers face bidding competition. Next, the days on market is 14 days, which is under 30 days, which means it's really low because properties typically sell in around 2 weeks, which means it's strong demand from both homeowners and investors. Next is potential buyers' growth. So as you can see here, over the past 12 months, it has grown at 15.61%, which is a big leap in buyers' interest, indicates that more people are competing for the same limited pool of properties. And lastly, rental yield, which, as you can see here, it's 3.46%, indicates a balance of rental return and capital appreciation potential. Carseldine's combination of low supply, higher demand suggests prices are likely to keep climbing up. Low supply, high demand is a perfect combination for price growth. It's well suited for investors who want a mid to upper range of property close to 1.1 million, with an emphasis on rental market stability and long-term capital growth. And our number 3 suburb is Tingalpa, with a median house price of $1,053,000. And here's why it made the list. Over the past 12 months, price growth has soared to 21.66%, one of the highest growth rates in our list, and it suggests a strong buyer confidence and local appeal. And next, the vacancy rate is under 2%, which is 1.23%. It's really low, which means tenants are securing the properties right away, which is ideal for investors looking for consistent rental income. Next, days on market is 12 days. Again, anything under 30 would mean that properties are selling quickly, pointing to robust demand. And lastly, rental listings has changed significantly over the past 12 months. As you can see here, it's negative 36.84%. Negative because if we're comparing it to the previous 12 months, it's less. So supply for renters is limited, often leading to rising rents. Tingalpa's recent surge in capital growth is really attractive if you want to build equity really quick. It's a suburb with strong demand, resulting to upward price and momentum. And for investors who want capital gains, reliable rental income, Tingalpa would be the best option. Tingalpa's recent surge in capital growth means you can really build equity really quick. So it's an area that has a strong demand with continued upward price movement. So for investors who wants both capital gains and reliable income, then Tingalpa would be one of the best options. And our number 2 is Brighton, with a median house price of a little bit over 1 million. Here's why it's a good option. The stock on market, as you can see here, is 0.68%, which is typically a low supply scenario, driving competition among buyers. Next, we have the capital growth over the past 12 months, which, as you can see here, it's 16.29%. It shows a steady price appreciation, not as dramatic as Tingalpa though, but still well above average. So as you can see here, the days on market is 20, still under 30 days, but slightly longer from the 2 other suburbs that we mentioned. Still a fairly fast-moving market. And lastly, median rent growth over the past 12 months is 4.84%, which means rental values are increasing. So it's definitely a good sign for a long-term income stability. So Brighton is a stable and consistent area. It may not have the highest short-term growth rate on this list, but it balances the capital appreciation with a healthy rental market. So Brighton is a really great option for investors who wants a bayside location with proven performance, as indicated by the data metrics that we highlighted, an increase in property price, and a continuous increase in median rent, and the diminishing supply and demand indicated by short days on market and a short stock on market percentage. So investors who want a bayside location with proven performance might find Brighton appealing. And finally, the number 1 in our list, Deagon, with a median house price of $850,000. And here's why it's number 1. It's the most affordable in our list, with a median house price of under 900,000 is a great entry point for new investors and for those on moderate budget. And days on market is 11 days. It's almost as fast moving as Tingalpa. So if you're a buyer, you need to act quickly. And the vacancy rate is under 1%, 0.68% to be exact, which indicates a very strong tenant demand. You're not gonna have a problem getting it rented right away. And lastly, the median rent growth over the past 12 months has increased by 10.34%, one of the best rent growth rates that we have, which suggests a significant upside for rental returns. So Deagon is the most affordable, combined with the high demand and strong rental growth, would be suitable and best for investors who's on a tight budget or wants a lower entry price with the aim of getting a high potential returns to build equity in the shortest amount of time and also having a strong rental income. So those are the 5 best investment suburbs in Brisbane under 1.1 million. Based on the core data metrics I used to narrow down hundreds of suburbs. All 5 of them have the core metrics for a good investment. But depending on your goals, you might want to consider certain metrics over others. For example, if you're after capital growth, you might want to emphasize on short days on market and 12-month price increase. Or if you want cash flow, you typically want to favor high yields and low vacancy rate. And of course, if you're looking for a balance, pay attention to both growth and yield metrics to ensure you're covering multiple aspects of your investment strategy. I've saved this exact search in SuburbsFinder so I can track these areas monthly. If you want to do the same, you can try SuburbsFinder and start tracking potential investments before they hit everyone else's radar. I've left a link down below.